Hello and welcome to the Real Estate Minute. I'm your host, Ivan Estrada with Ivan Estrada Properties at Douglas Elliman. And in this episode, we're talking about taxes, how to save as a homeowner, an investor, and a developer. So the Real Estate Minute is going to work like this. There are 3 segments, 1 minute each, 3 minutes total. Let the Real Estate Minute begin. These 2 strategies will save you thousands as a homeowner. As a homeowner, you are entitled to 2 different tax strategies that will save you thousands down the road. The first one is property taxes. For example, here in Los Angeles, you are able to take up to $10,000 as a tax credit at the end of every fiscal year. This can be used towards your ordinary income so that way you pay less taxes. Also, there's the capital gains tax. So whenever you sell a home, if you're single, you get to deduct $250,000 off your gain. If you're married, it's $500,000. So for example, if you bought a house for $1 million and you sold it for 1.5, you and your spouse don't have to pay any taxes here in California. This is how real estate investors pay 0 in real estate taxes. Real estate investors get to write off all of their mortgage interest deductions, all their property taxes, but most importantly, they have the 1031 exchange. What is that? Well, real estate investors are able to buy bigger property once they sell a smaller one. For example, let's say you bought an investment property for $500,000 5 years ago. It's now worth $1 million and you have to pay taxes on $500,000, right? Wrong. You can put that into a much larger property that you purchase and be able to defer that tax for the future. This is how a lot of real estate investors keep buying property, and all they do is a 1031 exchange and you don't have to pay taxes for 5, 10, 20, maybe even 50 years. Why does it pay to be a real estate developer? Real estate developers have the biggest tax advantages of all the investment pools. They get to write off their mortgage deduction, their property taxes, their expenses, and they also have a couple of other advantages as well. Depreciation being the biggest and the best for them. They get to depreciate all of their assets up to 39 years. If you have 1, 2, or 100, this really adds up. The second one is opportunity zones. The federal government has regulated certain areas as opportunity zones. They want investors to come in and be able to invest into the infrastructure. And the last one is R&D credits. So if you do research and development, have a software company or AI, you have a ton of other tax advantage credits at your disposal. Thank you so much for watching this month's Real Estate Minute on tax savings. I hope I was able to educate you on the opportunity you have as a homeowner, an investor, or even a developer. I'm Ivan Estrada with Ivan Estrada Properties at Douglas Elliman. Don't forget to follow me on social media, and I'll see you next month.